Good afternoon, everybody. This is Dennis Wilborn. I want to welcome everybody to Making Money Trading Stocks, Options, and ETFs for the Active Trend Trading System. We're looking to see if Michael is joining us today. It appears he is probably enjoying the last of his summer days there in Austria. So let's get going. I want to remind everybody that all the materials we do present are for trading purposes only. Traders should always pay for trade any new method prior to the risk of their own personal capital. Most of you already know me, so it's a little bit about what I do and where I've done it. Active trend trading has been around now since 2007, so we're into our 11th year, and really quite pleased and looking forward to continuing on with the services that we are providing with the active trend trading. We joined this year with my youngest son, Brandon, is going to be taking over some of the research responsibilities and marketing and that kind of stuff. That was in the works already, but he is going to be even more active going forward. So I'm glad to see that. Very, very pleased. So, hey, always remember, buy wholesale, not retail. Buy wholesale, sell retail. Works for stocks and options too. You got to remember that. Oftentimes we get stuck buying the retail position and or the already marked up price on the stocks because of for various reasons. Then the reasons can be as wide and varied as, well, just poor timing. The index pulls back a little bit more than you expect it to, and so a lot of different reasons. But if we take on a system that is basically a pullback type system, we will be closer to buying wholesale and then selling those positions when they get up to a retail price. The objective of the Making Money Trading Stocks, Options, and ETFs webinar that we do weekly is, one, a timely, actionable intel review at the end of the week. What's the market doing? What's the market telling us? Stocks and ETFs performance, if we had anything that was open for the week, and then we add on any bonus trades that we're potentially waiting for. We have been waiting for the gold bonus trade to turn around, and gold just is not cooperating. It is not basically giving us the triggers that we've been looking for, and so right now, just sitting there standing by. The dollar remains strong, and as long as the dollar remains strong, gold is probably not going to catch the bid that we're looking for it to do. Here's where we're sitting as of about 9 o'clock this morning with the active trend trading and the individual indexes. As you can see, Dow's up about almost 5%, S&P up a little bit over 8%. NASDAQ composite is just having a gangbuster year so far, to go on top of the one that it had last year also. And then Russell also is kind of in the middle of the mix between the NASDAQ and the S&P, up at about almost 13% and moving very nicely. Let's take a real quick look at the individual entities. There we go. Here's a weekly chart on the left, daily chart on the right. And so weekly is our anchor chart. Daily is what we kind of like want to do our trades off of, or we'll break it down if we're looking at a daily chart. We'll be using an hourly or an intraday chart to do our trades off of. Whatever the anchor chart is, we go one step down into get a more aggregate type stock. This is the S&P, as you can see, and was pointed out a little bit earlier, is the S&P is looking like it would like to put in a shooting star for the day. However, yes, our long wick is telling us that we have where the sellers are coming in. However, the body and the wick in a shooting star, the wick has to be 2 times the width of the body. So it is looking like, if it closes down just a little bit more, we may get down there. If it closes down about, I'm just eyeballing it right here, but about 28.92 or less, that would give us our shooting star. On a daily basis on the S&P, what we're looking at is we pushed on up to a higher high, made all-time high. Immediately the following day, put in a bearish harami. And then the bearish harami hasn't quite fulfilled to the downside because we really need to take out that lower gap because we know we have strong support there at 28.86. What does that look like on the spider chart? Well, let's find out. There we go. Spider chart. See, now something similar. Spider chart, it looks like it may be getting closer to giving us that shooting star on a weekly chart. And also, bearish harami, follow to the downside. But we're still, this would be, you know, what has been the trade with the S&P and the other entities? Pullbacks. Pullbacks in the moving averages, pull back below the moving averages, and then a break higher. Some of the pullbacks have only been like 2 or 3 days, like we see right here, a mild pullback, and then a pop higher from there. So that's what we'd be looking at. Trade the pullbacks until they stop working. And one of the things we can do on that is look at what's the trajectory to the upside from here. And we can measure a Fibonacci to give an idea of where it might go. What about the Qs? Oh, come on. The Qs, similar thing. Okay, on and this is a perfect example of what I'm talking about, the Fibonacci extensions. I went here and I measured from swing low, swing high, back to swing low, and then that would give us a, if the move up is to maintain symmetry, it would basically get up to the 100% retracement. It did that and then is backing off from that. In a stronger market, what we didn't anticipate is for it to get up to the 1236 extension off of this and then do a pullback. But regardless, it hit the 100% move and now is basically just kind of going sideways. TSI on a daily chart looks like it wants to turn over. TSI on the weekly chart is still picking up momentum and pushing to the upside. Ultimately, we may look at the 1618 and the 123, which is a 188, and the 1618 extension up at about 192. All of those well within the objective of the Qs right now. What is our basic trade? Again, trade the pullbacks until the pullbacks stop working. Okay, IWM. IWM, not much of a pullback. We're getting kind of a lateral consolidation here after we did the breakout to all-time highs. Look for any type of pullback around towards the 170 level. May not get down very close to it, but the 8-day, it is respecting the 8-day, and I would expect it to respect the 20-day on the way up. Those of you who are premium members, this dotted 34 EMA, we're going to be talking about that very soon in the premium training sessions. It is just another moving average I would like you to take a look at. You don't have to implement it totally into your trading, but if it makes sense, it could be just another check for when we want to get into either a long or a short position. So let's go back to our slides real quick. There we go. Here's where we're sitting for the active term trading on strategies 1, 2, and 3. To date through August, we'll be closing that at the end of the day. And then, of course, here's the go, no-go table that we put out for August 26th. We were primarily, as you see, no TSI setups, and so we didn't take any trades off of that. We did take a trade, and this is a test trade that I was doing, demonstrating a particular entry technique for premium members. And we're currently in a position on Gush, Gush. And let me take a real quick look, roll down here at Gush. As to how it, yeah, it's doing, it's doing okay. It's bounced around a lot. But it was basically just an example of how we can utilize a particular order type to get in. So those of you who are premium members who were in for the training, who missed the training, please go to Wednesday night's training, and you'll be able to see those individual, that particular entry that we were working on. Those of you who did go to that training session, you have any feedback for me on what you thought about the that type of conditional order? Okay, let's move on. Yeah, if you got an issue, just ask, shoot it down there. Hey, here's where we're sitting. What happened last week? I'm in Gush at 3686. GLD, we had our spread strategy going on that. I'm just about ready to close that trade out until we get a better floor to launch a new gold trade. And that, in fact, because gold has not performed per the seasonality strategy, it may now go all the way into the October, November timeframe to catch its bid. Tesla, we got whacked with a slight loss on that for the week. Closed the BABA trade up really nice. Since for strategy 3, since the beginning of August, we've done a cash flow about a little bit over $4,000. So I'm very pleased with that. I'm going to continue on with that particular area. Here's what I wanted to highlight really quickly for everybody is what tends to happen during the month of September. Well, as you can see, Russell, seasonality, a little bit of an uptick at the beginning of the month of September and then a drop. What does the drop prepare us for? Well, the drop at midsection of September through maybe midsection of October prepares us for this setup at the end of the year, the October, November, December, Santa Claus rally, some people call it, but it's the end of the year climax, if you will, run. The Russell tends to move more than the S&P. The Qs tend to run a little bit more than the about the same amount of the Russell. So we really want to hone in and look for the potential trades on the Russell and the S&P, or correction, the NASDAQ. NASDAQ, similar type of thing. What does it tend to do we may get a slight bid up into the midsection of September, pull back into the, then a drop to the first part of October, and then there's your end of year run, the last quarter run. Will we get that same thing this year? Nobody can say for sure. We've got a lot of crazy stuff going on out there. We've got we do have the trade talks that are happening. We know that NAFTA has been quasi-approved. We know that we're in work with working with the Chinese on the trade talks, and so what's very interesting is if I would think, and this is purely speculation on my part, if a deal gets done with China, I anticipate China and the NAFTA deal goes through, some of the other trade initiatives, and they are completed, so they're no longer hanging over the market. We could get a pretty significant rally into the end of the year, because of those trades deals. that. There we go. Sorry about that. I don't know why my broadband, which is supposed to be the fastest and best on the island, keeps occasionally dropping the load. And so, okay, S&P, as I said, S&P, a little bit less of a run, but September tends to be a little bit further, further break to the downside than the S&P and or the Nasdaq and the Russell. So, hey, future events coming up. Basically, BAM meeting September 15th. We're going to be talking. No, it's not right. Not September 15th. Yeah, it is September 15th. We're going to talk about the psychology of you. Then Silicon Valley Option Groups, the September 13th. That is a Thursday evening at 6 o'clock. I'll be doing a presentation on seasonality for that group. If you happen to be in the Bay Area, please come on out to the Elks Lodge. And at 6 o'clock in the evening, goes from 6 to 9. BAM meeting again. This BAM meeting on September 15th, 1:30 in the afternoon. It's we couldn't get the morning start, and so we'll be giving it, going at 1:30 in the afternoon. Our premium training continues to do well. We're going to have some modifications in our weekly training and improvements, thanks to some of the suggestions of both you guys and my son, my youngest son, who's going to be helping me out. But we're going to be talking about staying out of no man's land. Our Wednesday night trading is going to be on Thursday night this coming week. And then we're working on getting all our video, training videos reproduced and back into places. And then early warning alerts are going to be replaced with what I think is a much more robust system called market action points. And what that is entailed is some of the similar, I've gone back and restudied how to eliminate the a lot of the whipsaw that we were experiencing with EWA, got rid of that, and also found there were several opportunities there was both minor market action points and major market action points. Did a great job picking up the majors throughout the years. That's what EWA did. But there's also this tremendous opportunity for the minor points that oftentimes led to pretty significant runs. And so, just stay tuned. There's going to be more out about that towards the end of September. So with that, hey, guys, keep the egg growing. 8:19. So I do have time to take a look at And so, no, Eric, I did not connect with Don Brady about presenting options to you guys. I, shot him. We've emailed back and forth, but we haven't got anything put together totally. So keep the egg growing, trade wisely, trade profitably. For those of you who are premium members who partake in the final hour, we'll be starting up with that. We did send out an alert to do a Tesla trade. I want to at least have some exposure to one of the entities, and I chose Tesla. I want to have some exposure going into the long weekend. And so with that, hey, remember 2018 continues to be a year of breakthrough and restoration. And the lesson from this particular tree is always remember, grow where you're planted. So have a great Labor Day weekend. Trade well and prosper, my friends. Aloha. God bless.